So you've set aside some money and are now looking to enter the world of stock market. But where do you start? Investing in stocks can be a little intimidating if you've never done it before. Yes, there are risks, but if you educate yourself and know where to invest, it can be an easy way to make a great return over the long run. The goal is to put your money to work in one or more types of investment vehicles and let the money grow over time. For a beginner, it all starts with the understanding of how the stock market works, what your investment goals are, and how you handle a little bit of risk, or in some cases, a lot of risk. In this video, we will walk you through a step-by-step process answering 8 of the most important questions in stock market to guide you with your very first investment. So what are we waiting for? Let's begin. Step 1. Understand what stock trading is. Before we move on to investing, how about we start off with the basics? So what is stock trading? Stock trading is the process of buying and selling shares of publicly traded companies. Corporations issue shares to raise money. These are equity investments that represent legal ownership in a company. You become a part owner of the company when you purchase their share. The process is simple. Here, for every buyer, there's a seller. When you buy 100 shares of a stock, there's someone who's selling exactly 100 shares to you. Likewise, if you want to sell your shares of stock, someone is to be there to buy them. If there are more buyers than sellers, in other words, if there's more demand, then the stock price will go up. On the other hand, if there are more sellers than buyers, in other words, too much supply, then the stock price will fall. Step 2. Know the different types of stock investment. Stocks are available in different categories. There are blue chip stocks, which are shares of large stable companies. These are expensive but provide the lowest risk and have an established track record for earnings. Then there are growth stocks. Such stocks are issued by companies that are expected to have high earnings. As the company grows, the stock value is likely to increase too. The third is value stocks. These stocks are regarded as undervalued in the market, but investors do see potential in them. There are also penny stocks, which are low-priced stocks with high risk. This type of stock typically is issued by small startups that need to make money. There are other types of stocks such as speculative stocks, income stocks, defensive stocks, cyclical stocks, among others, which we will discuss in a different video. Now on that note, let's move on to the third most important question that you need to be able to precisely answer before you go about making your very first investment. Step 3. Be sure of how much money you are ready to invest in stocks. The most important question to ask yourself is how much you really want to invest in the stock market. Investing in stocks is way different than putting your cash in a bank account where it sits to grow and earn interest. An investment always has its risk that comes with it. The price of stocks can easily go down as it can go up in value. This means that you're taking a risk with your money. And if you're going to do it, you must at least plan your investments for 5 years. That is to say, do not invest your money that you're going to need within the next 5 years. This may include emergency funds or any other funds that you've separated for your child's tuition or your house's down payment. Step 4. Understand how much of a risk taker you are. After you've allocated your finances, there's one more thing for you to determine: your risk tolerance. Investing in stocks is not like the racy, glamorous, or high adrenaline action scenes you see in Hollywood films. It's about maintaining a reasonable and calm attitude to the stock market in a hope to generate as much investment returns as possible. The stock market is quite risky, and any money you put in could fall in value. Honestly, you could lose it all. The phrase "past performance is no indicator of future success" is quite popular in stock market because there's no guarantee your investment is going to do well. Take this for example. In 2020, during the COVID-19 pandemic, the market plunged by more than 40% and rebounded to an all-time high within a few months. So if you're saving over the short term, it's wise not to take too much of a risk. But if you're thinking long-term, investing in stock market might as well result in good returns, provided that you're able to handle the risks. For this, we recommend that you take time to learn the basics and the individual securities composing the market. Risk mainly comes from not knowing what you're doing. Step 5. Know what kind of investor you are. Now it's time to decide your investing approach. If you're someone who has the time and resources to research thoroughly and evaluate shares on a continuous basis, you can invest in individual stocks. Buying individual stocks means that it's your responsibility to build a portfolio, look over the annual reports, make acquisition and disposition decisions, and keep yourself up to date with what's happening at each of the companies where you maintain an investment. It is, after all, your hard-earned money, and if you're smart and patient, you'll be able to beat the market over time. But if things like quarterly earnings reports and mathematical calculations sound like an intellectual torture, you are free to take on a more passive approach by investing in index funds. Index funds are mutual funds or exchange-traded funds whose portfolio mirrors that of a designated index, aiming to match its performance. The S&P 500 is perhaps the most well-known index, but there are other indexes for nearly every market and investment strategy. Also, another option has been widely popular in recent years, and that is the robo-advisor. A robo-advisor is a brokerage that essentially invests your money on your behalf in a portfolio of index funds. They provide financial advice and manage your investment on the basis of your age, risk tolerance, and investing goals. Their platforms are simple and intuitive for investors of all kinds of knowledge and experience. Step 6. Create a brokerage account. To invest in stocks, you gotta have an investment account. In stock market, this specialized type of account is called a brokerage account. Opening a brokerage account is typically an easy and trouble-free process that only takes some minutes. Many companies such as TD Ameritrade, E-Trade, and Charles Schwab offer these accounts, and you can easily fund your brokerage account via EFT transfer, by wiring money, or by mailing a check. What actually takes time is choosing the right type of investment account. If you're just trying to learn stock market investing, you can choose between a standard brokerage account and an individual retirement account. Both these account types will allow you to buy stocks, mutual funds, and exchange-traded funds. But if your goal is to save enough money for retirement, an individual retirement account is the best option. Individual retirement accounts, or IRA accounts, come in two varieties: traditional and Roth. These accounts are very tax-advantaged places to buy stocks, but the only downside is that it can be challenging if you want to withdraw your money before you get older. Now, for those of you who want easy access to their money or want to invest more than the annual individual retirement account limit, you'll probably want a standard brokerage account. Also, you can always choose robo-advisors to guide you through this. Step 7. Learn how to choose your stocks. For a beginner, choosing the right stock can be tricky, but there are a few tips that could be helpful while deciding which stock to invest in. First, you gotta learn the concept of diversification of portfolio. This means that you should have a variety of different types of companies in your investment portfolio. And while doing so, always choose the business that you understand. Buying high-growth stocks might seem like a good idea, but remember, those stocks are also highly volatile. Until you're a little more experienced and you get the hang of investing, you might want to avoid such stocks. And lastly, research as much as you can. If you're unsure what type of investment to pick or worried you might take on too much risk, that's where we come in. There are several websites and YouTube channels packed full of detailed fund and stock market information just for you. Step 8. Know when to sell your stocks. Investing is one part of making money through stocks. The other, and probably more important one, is knowing when to sell them. Many investors have trouble selling a stock, and most of the time it is because of the innate human tendency toward greed. For a beginner, this decision can especially cause distress. We have only one advice for you. Trust your data and analysis instead of market's emotional mood swings. You've definitely put some research into the stock before you bought it, so rely on your data. The bottom line, if your sale results in profit, it's a good sale. Also, if your sale results in loss, even though you had a good enough reason behind it, it's considered a good sale. You make mistakes, you learn. Selling is a poor decision only when it's guided by your emotions instead of data and analysis. Learning how to invest in stocks might take a little time, but once you get the hang of it, you'll start to understand the highs and lows of the stock market. And here's a little secret of investing by Warren Buffett, the Oracle of Omaha himself. Continue investing. It could be traumatic when the markets tank, especially if you're a beginner. During those times, make sure you keep your emotions in check. Don't panic and sell off your investments. Buffett says that the markets are always going to be volatile, and the best thing an investor can do, regardless of experience, is keep a level head. You keep your risk tolerance and financial goals in mind, and you'll be able to call yourself a shareholder before you know it. Thank you so much for watching the video, guys. Let us know in the comments how you are planning to make your first investment. Please leave a thumbs up and share the video if you found it to be useful. Subscribe to our channel if you haven't already, and see you in the next one.